Hey everyone, today we want to uncover just how the wealthy keep their money away from the tax man. Legally, of course. So let's just jump right in. First off, let's clarify two terms that often get tossed around. And one is tax avoidance and one is tax evasion. Now, the difference is one is legal, one isn't. Imagine you're kind of cracking the IRS code, if you will. And there's a perfectly legal advantage that anyone can use, but either they don't know about it, they don't understand it, or their tax planner or tax accountant is just what I call a tax calculator, and he's not looking for ways to reduce your taxes. Now, one of the most often used strategies for taxes is investing in real estate. And if you've ever played Monopoly, you know the goal of the game is to acquire as many properties as you can and actually control the board and avoid bankruptcy. So how do you go bankrupt in Monopoly? It's by paying others every time you roll the dice and you land on their property and you owe them rent. Buying property can be a really good tax advantage move. See, with real estate, there's something called depreciation. This little gem, if you will, lets property owners deduct a part of the cost of their buildings each year, not the land, and it's essentially acknowledging that buildings are going to eventually wear out. Think of it as your property slowly shedding dollar bills that you get to pick up and put in your pocket all those years that you own it. Now, with real estate, there's four critical things that you want to be aware of. One is depreciation, like we just talked about. Two, the interest paid is also a deductible expense. And then three, there are other expenses like insurance, maintenance, and repairs that too are deductible expenses. And then number four, which is the best, you get the appreciation and the cash flow, which is a game changer at the end of the day. Now, most real estate profits are made through the appreciation and the cash flow of the properties. So you definitely want to get properties that have the potential for appreciation, and cash flow is always a bonus. Now, another great tax strategy is charitable contributions. Now, the problem with charitable contributions is oftentimes people don't want to necessarily part with their money. But charitable contributions aren't just a way to get good karma, they're also good for your taxes. So think about this. The common misconception is that once you give your money to the charity, it's gone forever. And it's true the way most people give to charity. However, the wealthy can use various charitable strategies that give them massive tax deductions for giving, but they can also produce income during their lifetime, and you can replace the gift that you've given to the charity tax-free to your heirs. You see, a life insurance strategy that benefits the charity, you while you're living, and then your family is a great way to handle charitable donations. The right type of strategy can also generate income for you during your lifetime, and it can be tax-free income. And eventually you're going to leave an equal or greater value than the gift that you gave to the charity to your family. And again, this is going to be a tax-free benefit. The only one that's cut out of this picture is Uncle Sam. You get to do a lot of good for others and not neglect your family at the same time. It's pretty sweet. And then there are other financial instruments that Congress has approved to avoid taxes, and these are trusts. This is life insurance can produce tax-free income and tax-free benefits. And if you own a business, there are typically other deductions as well. So taxes can be kind of like solving the Rubik's Cube. You know it can be done, but you need to make all the right moves. We try to make this easy for you. Think of the tax code as a 5,000-page book of cheat codes. They're already telling you how you can avoid taxes legally. All you have to do is implement the right codes. Now, we've solved most of this puzzle for you, but each situation is different. You need to implement the strategy that works best for you. It's what we see the wealthy who want to build generational wealth take advantage of every day. So, who are you going to call? Well, not Ghostbusters in this case. In this case, you want to have something better, someone who specializes in these kinds of strategies. And sadly, it may not be your CPA or your attorney. Now let's talk about something that's a bit quicker when it comes to deductions and your taxes. It's Section 179. This isn't just any tax break. It's kind of like the golden ticket for businesses. Section 179 allows businesses to deduct the purchase price of qualifying equipment and software that they bought or even leased during the year. So you can write off a good portion of the entire purchase in the year that it occurred. But you don't necessarily have to be a current business owner now. You literally can create a business and take advantage of the 179 deductions and still keep your regular job. Yeah, you can buy and own the equipment and have others do what I call the day-to-day work, and you reap the tax benefits and the income as well. And we can show you how to do that. So having a business, even if it's not your primary business, can generate massive tax advantages. Well, there you have it. That's at least a short, quick peek into the world of tax avoidance. But again, not tax evasion. It's a matter of knowing the rules and understanding the cheat codes, if you will, that the IRS already gives you. Now, I realize this was kind of fast and furious. This may be a lot to take in. So reach out for a more in-depth explanation, and we can see if any of these strategies might work for you in your situation. Well, until next time, take care.